Thank you so much for your time, Juliet. But let's look at what we've seen play out with the exchange rates more recently. You know, how do you, especially in what we've seen in the parallel market, how sustainable do you think this is?
Thank you, Kenneth, for having me. It's very interesting to, witness the rebound in the interest rates witnessed last week from the, its lowest level in the past 4 years. On Wednesday, there was a movement from 505 naira per dollar to 487, and by the end of the week, it was closing at 498. Presently, this was determined by some discussions that CBN is gearing towards, pumping more funds and sustaining the pumping of funds into the retail end of the market, and that had actually, scared speculators a lot and probably affected their demand. But how sustainable that will be is another kettle of fish, because presently the reserve, had got beyond the threshold of 34 billion, dollars presently, due to this funding that had continued taking on and happening. So it's how it will be sustained. That's another different story. Presently, the issue on ground now is how to ensure that there is liquidity. That is what the central bank is seeing. How to make sure that there is liquidity enough to, to kind of bridge the gap between the official rates and the parallel market rates. And that had made the continuous intervention of the Central Bank of Nigeria in the market, in the foreign exchange market. But that had also not helped in so many ways, because it had also given discouraged a lot of things that are supposed to be happening in the economy. That's like like the investors' interest had also been hampered, and their confidence. So presently, I don't think it is that sustainable. Looking at our reserve base, looking at the depletion to the point of going below the threshold, I don't know how sustainable that will be in the long run.
In the long run, you say, but let's look at more near term and for FX supply and the exchange rate. What's your outlook?
Okay, for the FX supply in the short run, I think it's positive, because presently we know that the global oil price had, it's been favorable, trading now at $72 per barrel, and some speculations that it might get up to $80 and even $100 per barrel. And we know that is our main source of external reserve as a country. So that is likely to, cause an increase or boost our external reserve and still empower the CBN more to be able to intervene in the market. And if that continues, that will definitely mean that the CBN will still have more control and have more hold. Apart from that, there is also the aspect of the unemployment that is reducing in the diasporan countries, with USA, for example, recording a 30 basis points decline in unemployment from 6.1% to 5.8% between April and May. And that might also mean that more Nigerians in their diaspora are also getting jobs, and that might also bring about, more remittances to the country, and that will also boost, the forex. I have a positive outlook towards this, because this is bound or likely to cause an increase in our reserve and also strengthen the CBN to be able to continue intervening in the FX markets.
All right, we've seen the Nigerian FX policy come under question, some criticized in by different quarters. We've seen the World Bank and the IMF also tell Nigeria, urge Nigeria to desist from using that. But for you, if Nigeria should comply with this and stop the managed float, how do you think this is going to play out, the implications?
Okay, I think that if Nigeria should decide to stop intervening, it's going to have a positive outplay. It might not be immediately, but it's going to be more beneficial, because definitely the market forces is better to determine the price of the exchange rate. First and foremost is that the depletion we are experiencing consistently in the external reserve because of this intervention will stop. It will reduce the deficit, and that's going to be a positive, a plus to us. Apart from that, it's going to boost investors' confidence. Investors don't have confidence in a nation that the external reserve is depleting, just to intervene and to interfere in to influence what the exchange rate is. So I think if the CBN should just let the market forces determine, it's going to boost investors' confidence, people will begin to bring in portfolio investment will come in, even foreign direct investors will be interested, and this is exactly what we need as a nation now, bearing in mind the infrastructural deficit and the big gap and huge gap we have there. So I think it's going to be better if the market forces are allowed to determine, the exchange rate is going to also reduce things like import inflation and stabilize exchange rate. And when it is allowed to take on its own course after a while, the stability will cause a better rate and what will be beneficial to the nation as a whole.
But finally and very quickly, I'd like to get your take on what we've seen play out with interest rates and how that is affecting mutual fund investors.
Okay, we know that last year after during the COVID pandemic, there was a drop in interest rate, especially in the short term in the money markets, and also in the short term market, like the bank placements or fixed deposits, and also in the area of treasury bills and commercial papers. The rates were very, very low. But after towards the ending of the first quarter of 2021, the interest rate started picking and started affecting every aspect of those short-term funds. Then we saw also an increase, especially in the treasury bill for the 1-year tenor. Last week, Friday ending, it stopped at 9.4%. So we know that mutual funds is a basket of different investments, or comprising of sometimes equity, comprising of bonds, comprising of treasury bills, comprising also of other forms of like bank placements and other form of fixed income. So I think that this improvement in interest rates it's very positive for the mutual funds, because those in the basket of mutual fund, those investment portfolios that has to do with the short-term instruments that have been experienced increase will boost the total value of mutual funds and will cause returns to be increased for investors.
All right, then. Definitely quite a lot to look out for there. Thank you so much for your time on the show today. I've been speaking to Juliet Adenuga, the head of Treasury and Financial Institution at FTC.